Yo, what's happening, guys? It is Friday afternoon. The weekend is here. I'm going home to kind of chill out, relax, and then tomorrow, a friend of mine's actually opened up a CBD kiosk up in the north suburbs of Chicago. So, going to be going up to help out with that. But I wanted to make a video today. I've been slacking a little bit on getting the videos out. I thought this would be a fun topic for a video. I wanted to talk about what I'm investing in here in 2019. I'd love to kind of open this up and start a discussion. I would love to hear from you guys, so go ahead and drop a comment down below. Let me know, what are you investing in 2019? And then also comment on, like, has your investment habits, what you're investing in, has it changed here in 2019? About a week and a half ago, we made the video kind of, hammering home the point, time in the market beats timing the market. We kind of talked about how a lot of people are fearful of the stock market and real estate and really everything. The economy's been so strong for such a long time. A lot of people feel like, things have to turn around. We have to have a crash. We have to have a correction. We kind of talked about how nobody can time the market, so it's better just to continue what you're doing, continue dollar cost averaging. But I'd love to hear from you guys. What are you investing in 2019? And kind of, has your investing habits or behavior changed here in 2019? I think personal finance and having some financial literacy is incredibly important, especially to people like you and me, entrepreneurs, right? Like, what is the point of making money and earning money if you're just going to piss it away, or if you're not going to get that money working for you? I think it's incredibly important to remember to not let lifestyle inflation kind of grab hold of you. To me, money isn't about buying things, man. It's about freedom of choices and being able to live the life that you want. And there's a whole lot of people out there making a lot of money, making six figures, but who are still living check to check because they allow, you make more money, you get a nicer car, you get a nicer house, you go out to dinner more, you take nicer vacations. And at the end of the day, you're just still living check to check. You just got nicer shit, maybe take a couple nicer trips. But anyhow, what I really want to talk about today, like I said, what I'm investing in 2019. I also kind of just wanted to throw out some tips for people who are like just getting started investing, who are interested in investing but don't really know how to get started. I've actually had a number of friends and things like that recently who really have no retirement savings, no Roth IRA, they don't have any investment accounts, and are just kind of now starting to realize that that's something that they should be, starting to think about. And I've had some friends asking me, hey, can you help me set up an IRA, or can you help kind of school me a little bit on what I should be doing? And so that's kind of cool to see people kind of getting interested in that type of stuff. And I've also had a couple of you guys reach out to me since that video the other week. And again, I'd love to kind of open it up to you guys and, share your tips or whatever else down below. So in terms of what I'm investing in 2019, I've really kind of started to simplify my investments. There's very few things I'm investing in 2019. That doesn't mean I'm not investing a lot. It just means I've kind of streamlined what I'm doing. In the past couple of years, I had done peer-to-peer lending. At one point, I had 3 robo-advisors going at once. I kind of wanted to test them all out and see which one was best. But I had 3 robo-advisors going at once. I invested in Social Blue Book, which is sort of like Social Blade. That kind of turned out to be a turd. I was, heavily into crypto the past couple years. Here in 2019, things are really kind of simplified. I kind of have stopped buying individual stocks. I've done well in the past buying individual stocks, but at the same time, you can pick 9 out of 10 winning stocks, and that one bad stock can kind of drag down all your profits. So I've kind of moved to just really just kind of index investing. Last year, the past 2 years, I was doing some of these I was doing a Vanguard Life Strategy Fund. That's sort of like robo investing in the sense that it's kind of set it and forget it. You just put money into it. Vanguard has a target date fund, which you can say, okay, I want to retire in 2060. So you buy the 2060 target date fund. They automatically invest everything for you. And then as we get closer to 2060, your portfolio starts going more from, like 100% or 90% stocks and like 10% bonds, to it starts getting more conservative. They also have these life strategy funds, which is somewhat similar to a target date fund, but it doesn't get more conservative over time. So I've been doing a life strategy fund for the past couple of years. I finally just stopped doing that, and I started going 100% into VTSAX, which is Vanguard's total stock market index fund. So it tracks the total stock market index. I'm sure you guys probably hear this or have heard this before, but I mean, the vast majority of even professional advisors underperform the market and underperform, the S&P 500 or the total stock market. So you or I, as novices, as people who aren't following this all day long, every day, what chance do we have of beating the market when most professionals who live the market can't even beat the market? So, I'm going 100% into VTSAX. That's pretty much all I'm doing. I haven't really dabbled with individual stocks in a couple years. And just like literally within the past month or two, I've started buying a lot of Altria, which Altria is like a spinoff of Philip Morris. They bought Juul. They just bought heavily into Cronos, which is a marijuana company. I definitely think as marijuana becomes illegal or becomes legal in more states and becomes more widespread and everything, which is definitely happening, I think the big tobacco and probably big pharma is going to wind up getting most of the business. It's kind of fucked up how a lot of the small people kind of get shut out of the weed space as weed becomes legal and it becomes kind of a big corporate thing. I know Illinois is kind of in the process of trying to legalize recreational marijuana, and there's kind of a battle going on right now where there's some parties who want to try to keep it so that the little guy can get in by keeping fees and licensing and things like that reasonable, and then there's other people who want to give all the business to kind of their corporate friends. So that's something kind of going on right now, but I definitely think big tobacco is going to do very well in the weed space. So I'm investing in Altria. Also, like, a lot of the tobacco market is moving from smoking and tobacco and smokeless tobacco to vaping. So I think Juul's kind of got a bright future. Altria owns 35% of Juul, and they don't just own tobacco stuff. They own a good chunk of Budweiser. They own a good chunk of Kraft Foods. They own a lot of different stuff. It was kind of crazy. You hear people talk about Apple stock and Amazon stock, but I don't think there's really been any stocks that have outperformed Philip Morris over the past number of years. I saw a stat the other day, and I forget how long ago it was, but it really wasn't that long ago. If, like, within the last 10 or 15 years, you invested $5,000 into Philip Morris, today it would be like a couple $1 million. And Altria, who I'm invested in, is, I believe they spun off of Philip Morris. So if you had Philip Morris stock, you also got Altria stock with it. And I think there were a couple other spinoffs. Altria has also been increasing their dividends for like the past 10 years. They pay like a 7% dividend or something like that. They pay a really high dividend. It's always increasing. And I kind of broke my rule of not buying individual stocks and have been buying into that one. And just recently, within probably the last day or two, they actually missed their earnings numbers, and the stock tanked about $5. It was trading at 55 to 57. I think it's down to $50 or $51 today. But they spent a lot of money buying into Juul, and then they also spent a bunch of money buying into Cronos. I think they own 35% of Cronos. I think that's the name. Hopefully I'm not butchering it. But they've been spending a lot of money, and they also pay a hefty dividend. So I think that's kind of why they missed their earnings target. I'm probably going to buy a little bit more Altria. Market's already closed today, but I'll probably buy a little bit more on Monday. But for the most part, I'm kind of staying away from individual stocks. So that's kind of what I'm doing in the stock market right now. I'm sitting on a little bit of Philip Morris that I've had for years. Let's see, what else? I'm not putting any more money into crypto, but I'm sure some people are wondering about crypto. I really hadn't really touched crypto in a couple of years. I kind of got all my crypto just kind of sitting. Just recently, I sold off quite a bit of Litecoin and wound up buying Binance Coin. Now, that's kind of a risky move. All my money in crypto, I've pretty much, I don't want to say I've written it off as a loss, but I'm willing to play with it, right? Like at this point, I'm kicking myself so hard for not taking more profits back in 2017 that, like, at this point, everything, I'm just going to let it ride. I may shuffle it kind of in between cryptos. I'm not really actively trading too much, but Binance Coin, it kind of withstood the bear market of the past year and a half, 2 years better than, I think, pretty much almost any coin out there. They have the most users. They just recently rolled out the DEX. I think there's a lot of good, I think Binance has a bright future. There's some kind of crazy shit going on with Tether right now, but I think Binance has a bright future. And also, I'm a Binance affiliate. So Binance has an affiliate program. I encouraged a lot of you guys to sign up for it probably a year and a half ago. But with Binance's affiliate program, it started out paying 50% commission. After they kind of got popular, as most affiliate programs do, they kind of tend to get worse over time. So they actually cut that 50% commission to 20% commission. However, they have something now where if you hold 500 Binance coins, which is a pretty good chunk of change, but if you hold 500 Binance coins, they'll double your commission from 20% to 40%. And I have like 330 or so, 340 Binance signups, people who registered under me, and for the rest of eternity, I get a percentage of their trading fees. So I was able to double that from 20% to 40% by holding Binance. So that's going to help me double my affiliate earnings in Binance, just simply holding that coin. And also, even though Binance has been falling down a little bit from the all-time high of like 25 bucks the other day, I think Binance has kind of a bright future. So I'm not putting any new fiat, any new cash money into crypto, but I feel like Litecoin's kind of died out. I really don't see it going anywhere. So I wound up selling off a nice chunk of Litecoin in order to get up to that 500 mark of Binance coin. So let's see. So we talked about the stock market. We talked about a little bit about crypto and kind of what I did with Binance coin. Everything else, I'm just kind of sitting. I've pretty much gone 100%, and I guess I shouldn't say 100%, but pretty much all my crypto is in either Bitcoin, Ethereum, BNB, or I still got a small little chunk of Litecoin left that I'll probably just wind up sitting on just because it's not that much. But that's kind of what I'm doing with crypto. Outside of that, I got a little bit of money stuck in Lending Club, and I'm going to talk a little bit of kind of failed investments or things I've been kind of disappointed in, excuse me, over the past couple years. And then I'm sitting on that Social Blue Book investment from a couple years ago. I have a rental property here in Chicago, and I'm actually looking to buy another rental property. So I'm sitting on some cash, which I'm throwing in, got a little bit in a Vanguard money market account and a little bit in a high interest savings account. So that's kind of what I got going on in 2019. In terms of kind of like giving some advice and things like that, or, helping new people get started, I've done the peer-to-peer lending. It's incredibly disappointing. The returns are pretty pitiful. It's really not that much better than a high interest savings account. You're going to have a ton of charge-offs. It makes doing your taxes a little bit of a headache. And a lot of people talk about peer-to-peer lending as if it's liquid. You can do 3-year loans or 5-year loans. So like I've been in peer-to-peer lending or in Lending Club for years, and I'm still, I haven't made any new investments in probably a year and a half, 2 years, and I'm still slowly waiting for all that money to trickle out of peer-to-peer lending. So I found peer-to-peer lending to be incredibly disappointing. I would recommend you guys don't waste your time with it. If you got money that you're scared to put in the stock market or don't want to put in the stock market or want to keep more liquid, throw it in a money market account or throw it into a high interest savings account like an American Express or an Ally. I think Citibank sometimes has some nice specials. You could probably get 2% or something thereabouts just in a high interest savings account. What was some of the other stuff I was talking about? I tried the robo-advisors, Wealthfront, Betterment, and Schwab. Out of all of them, I would say Wealthfront was probably my favorite and performed the best. Betterment, I was pretty disappointed with the returns. I think Betterment is too much slanted towards international stocks. I've since wound up ceasing to use all 3 of these robo-advisors, but out of all of them, Wealthfront performed the best. Schwab isn't terrible, but what I didn't like about Schwab, they keep 6% of your money in cash. And here's the problem, some people may say, okay, well, I like to sit on a little bit of cash, so if the market dips, I can buy in and kind of lower my average in. But Schwab's robo-investor, they're never, ever going to use that money to buy stocks or get you a discount or make you money. Schwab advertises that they don't charge fees for their robo-investor. What they actually do is sit on 6% of your money, and then they either invest it themselves or make interest off of it. So essentially you are paying a fee. You're paying a fee in the sense that 6% of your money in your Schwab account is never going to be working for you. So I've since ceased to use all those robo-investors. I don't think robo-investors are terrible. If you're a new investor, I think it's a good way to kind of get started. They lay everything out in kind of pretty easy to read charts. They kind of make it fun to kind of see the performance of your portfolio. It's a very kind of unintimidating way to get started investing. But eventually, essentially at the end of the day, what they're all doing is just buying Vanguard funds for you. So I figure, why pay somebody a fee to buy Vanguard funds for me? I'll just go open up a Vanguard account, buy these funds myself, which is going to be cheaper, and then you can also start getting these Admiral shares of Vanguard mutual funds, which lower the fees even more. Now, Vanguard is kind of clunky, like their interface is like something out of the 90s. younger people or people who kind of like tech and fancy layouts and good UIs and things like that, maybe a little bit disappointed with Vanguard in that sense. It kind of took me a while to get used to like the really shitty user interface compared to like Wealthfront or Robinhood or a lot of these other things that are a lot kind of snazzier, flashier. But, I figure why pay somebody else a fee to buy Vanguard funds when I can just go buy Vanguard funds myself. I invested in Social Blue Book. It used to be you had to be an accredited investor to invest in a lot of like new companies and startups and tech companies and things like that. And a couple years ago, they kind of changed around the accredited investor rules. I think it was part of that Frank Dodd Act or whatever that was. And essentially now, even if you are not an accredited investor, there are certain types of investments that you are able to get involved in that used to be things only accredited investors could get involved in. There are rules. I think you can only put either 10% of your net worth or 10% of your yearly income into them. I saw Social Blue Book right after those rules changed, was one of the first companies to kind of roll out some type of investment. So I wound up putting, I don't know, maybe $3,000 into Social Blue Book, and Social Blue Book is integrated into the back of YouTube, or at least it used to be at some point. And I know YouTube at some point a while back bought FameBit, so I was like, okay, maybe Facebook or maybe Google or YouTube, ABC, whatever, will buy Social Blue Book, and it could be a payout. It's looking like that investment's going to be kind of a turd. Initially, they were kind of sending out some prospectuses and like, some of their like quarterly filings and things like that, but I haven't heard from them in years. So I've pretty much almost kind of written that money off. That was kind of a turd. And I think that's most of the stuff that I've been kind of dabbling in over the past couple of years. I feel like when you try to make big hits and make a bunch of money or set yourself up off one investment, when you try to get cute or do clever and do all this different stuff, you wind up losing money. When it comes to investments, I'm kind of a believer nowadays in the whole KISS thing. Keep it simple, stupid. Play the slow and steady race over time. Don't try to get rich off one investment. I think that's kind of what got a lot of people excited about crypto back during the bull run of 2017. Is like, it was one of those rare times when normal, everyday, average people like you and I were actually like getting rich off, a couple $100 or a couple $1,000. It was kind of a once in a lifetime opportunity. And I think that's kind of why people got so excited. But then you also see people get greedy and kind of chasing money. And then we see things like BitConnect happen, or we see people buying into Bitcoin at $20,000 and then having Bitcoin tank. For the most part, I would recommend most people probably stay out of crypto, or if you're going to get into crypto, just put a very small amount of money in it. Look at it as a very speculative thing. As far as new investors, something very basic that, something I've been telling my friends and things like that, something very basic that I think everybody should be doing. If your company offers a 401k and they're willing to match something, even if it's only 50%, throw in whatever they'll match to the maximum. So I would say what's pretty standard, a lot of companies have stopped matching 401ks and things like that. But I would say what's pretty standard is a lot of companies will match you, say 100% or 50% up to 6%. So you can put up to 6% of your salary into the 401k, and your company will either match 100% of that or 50% of that. Everybody, no questions asked, should absolutely be doing that. Not doing so is essentially leaving free money on the table. So if your company offers a 401k, absolutely invest in it. The second thing that most people should probably be doing, but I wouldn't necessarily say as automatic, is a lot of companies will offer discount stock purchases. So, just off the top of my head, one of my buddies works for CDW. I know they do a discount stock purchase. I got another buddy who works for Waste Management. Waste Management will let you buy stock at a 10% discount. I got another buddy who works for Comcast. Comcast will actually let you buy stock at a 15% discount. Normally they cap it. You can only spend 10% of your yearly income or 20% of your yearly income. This could be a very good thing to do. Again, essentially it's free money. The one thing you may want to consider or be on the lookout for is if you're working for a company that's kind of not doing well right now, even if you're getting a 10% discount, if the stock is going to be down 20% within the next year, it's not a good deal to buy it and get a 10% discount. But assuming you work for a healthy company, it's probably not a bad idea to take the maximum advantage of a discounted company stock purchase plan. Another thing to kind of think about is check out if there's a period you have to hold it for. Now, there's with my buddy who works for Comcast, he can buy stock at a 15% discount, and I think he only has to hold it for 2 days. So he can buy stock today for 15% off, and then 2 days from now he can sell it, and he essentially just made a 15% margin absolutely free. So, I think for a lot of people that's going to work out. I would be cautious about not having too much money tied up in your company. That's not very diversified, having all your money in one company. But definitely something to take advantage of. Roth IRAs, if your company doesn't offer a 401k, you can do a Roth IRA. I believe it was just this year they upped the limit that you can contribute from $5,500 to $6,000. And kind of the difference, just so that you guys are aware if anyone's kind of new to this type of stuff. 401k, your money is going in pre-tax. So if you can put up to, I think it's $18,500 or $18,600 into your 401k, and that money is going to go in tax-free. So if you put in $18,500, the full $18,500 goes in there. The difference with a Roth IRA, which I believe the limit is $6,000 now, that's post-tax money. So, that $6,000 that you put in, that money's been taxed already. So, depending on what tax bracket you were in, maybe you made $7,000, $1,000 of it got wiped out by taxes, and you put the remaining $6,000 in. So the power of a 401k is your money hasn't been taxed, so you're able to put it in, and that money's able to grow tax-free for all those years, and it's when you pull the money out that money actually winds up getting taxed. Now, with a kind of the benefit of doing like a Roth IRA is, you've already paid taxes on that money, but when you pull that money out at 59 years old or 65 years old or whenever you wind up pulling it out, that money is able to grow for the next however many decades, and when you pull it out, it's tax-free. So I think numbers-wise, it kind of winds up being a wash. The 401k, you have more money that has more time to grow. The Roth IRA, your money's growing all these years, and then you're able to kind of take it out tax-free. So that's just some kind of very, very basic things that kind of everybody should be doing. Outside of that, robo-investors, like I said, not a bad way to kind of get started. I think it's a good way to kind of get started investing if you don't really know what to invest. If you want to do index investing, it's pretty easy to pick like a Vanguard total stock market fund, or even like an S&P 500 fund, like I believe Vanguard's is like VFIAX. Going 100% into those, I don't think is a bad thing to do. Vanguard also, like I said, has a life strategy funds and a target date funds, both kind of easy things for a beginner investor to do. And this, I wouldn't necessarily say is like a great plan for retirement or the best thing to do. But if the alternative is not investing at all, things like Acorns or Stash aren't necessarily bad. I got one buddy who had no retirement accounts, really didn't invest at all. I'd been kind of trying to get him interested in investing, and he wound up opening up like an Acorns or a Stash account. And from my understanding, how those things work is, if you buy a coffee for $1.70, they round up to $2, and that 30 cents gets invested. So he's only been doing it for maybe a year and a half, 2 years, and I think he's got like $1,800. And I think they buy ETFs for you or something like that. But I think he's got like $1,800 in the account. So, probably not as much as he should be putting away. Most people should be putting away, probably minimum 15% of their income. But if the alternative is not investing at all, I think Acorns or Stash is probably better to do than nothing. And in the case of my buddy, doing this Acorns thing and seeing that money grow, kind of has him interested to the point where now he's asking me, hey, will you help me set up like a Roth IRA and set up a Vanguard account? So that kind of like sparked his interest to start investing further. So I think that's probably not a bad thing. I guess that's kind of a good start for like if you're completely green, if you're completely new to investing, you're interested in kind of getting started. I think those are some good tips to kind of help you get started. For those of you guys who already are investing or are more actively investing, let me know, what are you doing here in 2019, and kind of has your behavior changed or not changed? So that's all I really got for you guys today. I'm going to get running here. If you enjoyed the video, give it a thumbs up. If you are not subscribed to the channel, hit that subscribe button down below. And I hope you guys all have a wonderful weekend. I'll catch you later.